You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can only mean one thing. It is time for Volatility Views, the premier program for volatility traders. We were off for a little bit, but now we're back. You know, a little bit of a hiatus there for the holiday weekend here, the last hurrah for summer here in the U.S. Now the big Labor Day weekend is behind us, and the markets are back in full swing, back in action, and so are we here on the old program. My name is Mark Longo, of course, from the aforementioned theoptionsinsider.com, as well as from the ever-exciting, at least we hope so, Options Insider Radio Network. You guys know how to get at us by now. I hope at least you can join us live every Friday, 1 Central, 2 p.m. Eastern, or get it after the fact on whatever device, including a growing number of you getting it on the old YouTubes, which is not something we even intend. It kind of just goes out there automatically. So we'll have to make sure we curate that experience a little bit better for you, because a lot of you guys are consuming a ton of content over there on the YouTube from us these days. And again, it's not even something we really put out there. So glad you're liking it. I guess we'll have to make sure we get you a good experience over there as well. But of course, the podcast app, the website, the iTunes, the Google Play, all that good stuff. You can get it on all those places and many more. We are legion, as they like to say. And however you listen, make sure you reach out to us. Questions, comments, insights. We do love to hear from you guys. You guys are how we construct this show at the end of the day. So if you have a question, a comment, a guest, all sorts of fun things, we like to hear from you guys. You guys know how to reach out at us, theoptionsinsider.com, at options on most of the major social media platforms, or via the live chat if you listen in there as well. And joining me on the program today to help me break down the last couple of weeks, actually, because we were off for a week, last couple of weeks of tumultuous volatility action. First off, let's go to perhaps the global headquarters of Carmen Line, perhaps to a Costco near you. We never really know, do we? It's part of the volatility of the meatball. Yes, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. Where are you beaming in from today, sir?
I'm obviously from one of the 10 towns that changed America. Beautiful Riverside, Illinois, a city in the trees, a city in the forest, as they like to say. So there you have it, folks.
Well, when you say 10 towns that shaped America, I think everyone instantly goes to Meriden, Connecticut. Of course, the silver city of the world. And so another town that changed the world, probably for the worse, but we never know. All right. And then also joining us, he's actually not joining us from across the pond at 4 a.m. like he usually does. He's actually joining us from just across the way, not in Chicago, but across the way here in the U.S. here, out to a little podunk town called New York, where we are joined once again by the Spike's father himself, Mr. Simon Ho, holding down the MIAX hot seat this week, beaming in for the T3 Index, of course, the CEO over there at T3 Index and creator of a few products you may like out there, like Spikes and the BitVol Index, and maybe some other cool stuff as well we can get to. Simon, welcome back to the program. Welcome back to the States, sir.
Thank you for having me. It's nice to be able to do this conversation with you, other than at 3 a.m. in the morning.
Yeah, you sound so alert. It's great. It's like you haven't just been mainlining coffee at 3 a.m., but you're actually awake, which is always nice. It always makes the volatility conversation that much more fun as we roll right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get to it. Let's get to the Vol Review. It's been a weird couple of weeks. You know, we saw last time we got together here on the show, it was kind of in the teeth of a just dramatic pounding from renewed fears. China was just striking back on the trade war. Vol was escalating. Markets were selling off. Not exactly boom times in the space. Boom times for volatility, but not exactly boom times for the markets. Fast forward a couple of weeks, and particularly the last few sessions, and it seems like all those concerns are behind us. You know, just the mere mention, the mere hint, the mere tease of talks on the trade war at some distant point in the next couple of weeks, but not really a lot of material development beyond that. That's enough to send the markets into a tizzy. They were up over 1% yesterday, and today coming into showtime here, they're still in the green, a little bit less than they were earlier in the session, but still firmly in the green. The Dow leading the charts to the upside right now, up about 0.4%. S&P kind of the laggard in the middle. They're up about 0.25%, and the Nasdaq up about 0.1%. And of course, a couple of days of green on the screen means a couple of days of red on the volatility screen. Both VIX Cash and Spikes feeling the heat of late. Coming into showtime now, it was at a 15.5, and now it's come off even more, threatening a 15 handle now out there in VIX Cash, which of course puts us down over 5 handles from our last show. Remember, that's 2 weeks ago, so a lot has changed in the vol space since then. So we're talking about 5.5 handles off on VIX Cash land, and we're seeing Spikes was at a 15.85, now at about a 15.5 coming into showtime. So that puts us down over 5.5 handles, about 5 3/4 handles from this time last show. So a lot of downside happening in the space out there. VVIX also taking a bit of a break. VVIX, of course, our old friend, the volatility of volatility, coming in a whopping 16, almost 17 handles from our last show, down to about a 97 right now. So still frothy, still elevated, but not in the triple-digit spectrum anymore. Just a wee bit shy of it, 97. So still something you have to pay attention to, but not quite 115 or 120 or in that crazy frothy, super elevated range. All right, it's been a while. A lot's happened since then. So let's start with our guest, the Spike's father himself, Mr. Simon Ho. Simon, what's been on your radar? What's been lighting up your volatility tape since the last time we chatted, sir?
Well, for me, it's just been, last time we talked about the sort of reactiveness of everything, and you're up 300 points, down 300 points. So it's actually quite nice to see 2 days in a row where it's actually, going in the same direction for once. But yeah, it's a little bit choppy for us, for mine. I wouldn't, I'm very partial to sort of shorting front end of volatility in general. But right now, I think that the risk reward isn't quite there. We do a forecast, we forecast the probability of 1 month contracts being in the money or not relative to, the shape of the curve and the level of vol. And we're only getting readings in the order of like 50%. So basically it's a coin toss. It's a flip of a coin from here at the moment. So we'll be watching it. I think, if it goes down from here, given the backdrop hasn't changed materially, I'd probably look to be a small buyer at that point.
Small buyer. Interesting, sir. And Mr. Meatball, same question for you, sir. What's been lighting up your tape? What's been catching the eye of the crazies in the pit chatting? What's been dominating your screens over there at Carmen Line for the last couple of weeks, sir?
I mean, lots of VIX trading. There was a big call buyer this morning, today, and then a pretty decent sized put seller. I actually have been, Simon, you'll like these. I'm legging into kind of some bear 1x2s. So in the last couple days, I put on the SEP 16, 14.5. And I'm currently working my way into the 15, 14 1x2 in October for a small credit. And, then I'm going to kind of manage the delta on the way down. I do think that while I am maybe neutral to even a buyer of volatility itself, I think Vol is probably on its way. When we're talking, maybe not next week, but the following week, I think we're more likely to see Vol drop back below 90 than we are to see it get to 110, 120, just with kind of the way everything has been kind of experiencing volatility fatigue. And that's part of the reason why I think we've seen kind of some of the price action of the last few weeks. I think the market's finally saying, I am so sick of moving around on all this kind of marginal news. Maybe we need to take a breather here. And you could see volatility as espoused in the VVIX and shortly the Viking. I think I would be a seller of both of those at these levels.
Speaking of that and just the general mood, last time you were on, Simon, we were talking about that piece, I believe it was out of Bloomberg, talking about, the whole street kind of getting their upside gobbled up, and it seemed like by 50 Cent and others out there, and it seemed like the street maybe was poised for a bit of an upside vol crash. It seems like you were a bit of a buyer of that theory. Are you still buying that? Are you still thinking that we're in that kind of setup right now where we maybe not right now this moment, obviously we're trending downward, but we can have a bit of a retracement to the upside and the market's still poised that way?
Yeah, I think so. Some of the numbers were, I think the wage numbers today were pretty good. You're getting a mixed bag in there, but it's not bad enough, I don't think, to have a collapse at this point. I guess for me, this is, I'd use the term middling. It's sort of with vol back down at 15 now, and this daily cycle of news too about trade war, tariffs on, off. I think people are going to become more immune to that as we go forward because it's no longer something new and interesting. It's just something that is happening every day. So yeah, I wouldn't be surprised. However, got to note that we're getting proximate to getting close to October, and that's obviously the most volatile month in the year by a long way historically. So I think probably you'll find things calm down a bit, but I'd be a bit more cautious going into October.
Well, if you threw out 2 years, is October still that volatile? I feel like August in the last 10 years has been more volatile than October, or am I wrong?
I guess we did a study on it about a year ago, so maybe the weight of that year maybe had a difference, but I'm pretty sure. The research that we've done has shown that October is consistently
how far.
Month
how far back are you looking historically? I'm just kind of interested. I believe you. I'm sure your research is right. I'm just kind of interested in the context of what we're discussing. Are we talking back 50 years? Are we talking back 10, or what are we looking at?
We're talking more than 10. So the data set that we were looking at actually goes sort of just prior to the creation of VIX Futures and options, because the index can obviously be backfilled. Yeah. So we're not going 50 years for sure, but certainly let's call it closer to 20.
Okay.
Mark, we know the answer to that, Mark, because they call it Rocktober. They don't call it Rock August, and so the kids wouldn't come out with Rocktober if it wasn't the most volatile month, sir.
No, I remember Rocktober always seeming anticlimactic to me because you'd get all excited.
Exactly.
And nothing would happen.
You get all fired up for the name and nothing happens.
And then meanwhile, I feel like December, that everyone says, oh, it's slow seasonality, has been lighting up the tape, and August is another one that's been lighting up the tape.
I think we have a listener question about that in a little bit, so we'll save the December talk for later. But yes, we have a listener question about that exact topic because our listeners are just that savvy. We love you all out there. Let's look at the curves out here, see what's lighting it up. VIX Futures curve compared to the weirdness we've seen of late, seems pretty normal these days, getting back to kind of a normal contango. Coming into showtime, we saw the cash was a little bit shy of 50.5, and looking like the front SEP future was about 1.4 handles away there, and we saw out to Ox, so getting out 2 months, you're seeing it up at about 2.5 handles. So a pretty normal, somewhat healthy premium out there, and it gets bid up. And of course, we have that little blip in Dees, which I think we'll get to more in a little bit. Dees, kind of the weird soft spot on that curve, and then we go back out to normal, healthy, not even as crazy flat as it was. There's a little bit more structure to it right now. I mean, remember for a while there, listeners, for a good part of this year, actually, that VIX futures curve was just eerily flat. There was nothing going on, and it was kind of strange. And now at least we're getting back to, I don't know, Mr. Meatball, would you term this a little bit more normal, healthy type setup out here?
I mean,
compared to recent past.
I mean, I think the market is starting to normalize, but the liquidity. I think the issue we have is liquidity still sucks. I don't know why it's been so bad. I actually, I got quoted in the Journal this week on a liquidity. It's amazing. You give like a 45-minute discussion, and your quote is, I went to sell something and I couldn't get it done, so I had to sell at a lower price.
Isn't it amazing how the most, let's say, the most incendiary 2 seconds of your 45-minute conversation is somehow what makes it into the Journal?
Yeah, and then I found out that they were making fun of me on Bloomberg, and I was like, thanks a lot, guys.
That's why I stopped answering the phone when the Journal called. You'll learn that lesson eventually.
I know, but anyway, liquidity still sucks, but I'd like to see, now that we do have kind of a mostly normal curve, I'm interested to see whether liquidity starts to beef up a little bit. We still have that weird little kink no Dees, so which I think needs to be shorted. I don't know, Simon. Everybody loves that December seasonality. We just got done talking about October being volatile. Is in your research, is the December discount properly priced, or what do you think?
That's interesting. So when we did that study, it was really to try and verify or not whether October was, statistically consistently more volatile. So that I think we confirmed. The December question, I have much less clarity on that. I'm afraid I don't.
Yeah.
Nothing jumped out at us, at least. But,
yeah.
Unfortunately.
Well, that's a good reason. So think about that, folks. Oh, December is always slow. And you got Simon, who all he does is look at data saying, well, maybe that didn't pop at us, which would mean, it probably shouldn't be consistently priced in the way it's priced in.
Since we're talking about it, let's just get to this right now. I'll cheat and I'll bump up a question from our Vol voicemail right now to the Vol review. This question comes from Andrew89. He wants to know, do you guys also think, so I'm assuming from also that he agrees as well, do you guys also think that volatility futures are downplaying the possibility of December volatility? It's one of the cheapest months on the board and also one of the most volatile recently. And yes, Andrew, it's what we're just talking about right now. We have talked about this a myriad times on the show over the past, since the start of the year, really. It's kind of been that way pretty much almost since January. Ever since we had that weird flat futures curve out there in VIX, December was always a strange, aberrant little dip out there. We've commented on that many times. And there could be some recency bias to that. Obviously, December recently, the last couple of years, has been blowing the doors off it from a volatility perspective. Beyond that, yeah, it's been kind of quiet. So I guess it kind of depends where you put more credence. Is it the recency or is it the long-term historic? Sounds like the market is leaning more towards the long-term historical perspective. And it sounds like, Mr. Meatball, you're not, or maybe you are buying what the market is selling because it's cheap. So you're buying some Ds. Is that what you're doing?
Yeah, I would be I actually, and when we get to kind of what we're trading in VIX, I'll kind of let everybody in on a trade couple of trades I've been doing that I really like. That involve trading kind of December against some other contracts, because I think it's not. I don't think, at least right now, with liquidity as low as it is, and even more dry up in December, I think you are primed for some sort of crazy movement as as we go.
Yeah, I have to admit that little blip in December has been catching my eye for quite a while out here. Now, Simon, it sounds like you're not as much of a buyer on the perhaps underpriced nature of these volatility, or am I putting words in your mouth, sir?
No, I mean, yeah, the previous comment was more of a generalized one. I mean, I must say, when I see that just one node of the curve is dipping down like the December, it does make me curious. I guess I'm with Meatball. I would buy that, frankly, and I'd probably spread it against something else if you're concerned. But yeah, I don't really see why there'd be a reason for that. It doesn't jump out at me.
There certainly are a legion of opportunities to spread that out, and I know a lot of you have been, from judging by your feedback you've been writing in. So, yeah, take advantage of what the market doesn't give you deals very often, and if you perceive that as a deal, and it sounds like Andrew89 and many of you out there do, then take advantage of it. Get it while the getting is good. Since we're talking futures and the volatility space, Simon, I know you guys have been working diligently behind the scenes. You got to give us an update on what's going on with the forthcoming Spikes future, as well as Viking and all that other good stuff, sir.
Yeah, so making very good progress. So you probably know from previous shows that, the Spikes futures has been with the CFTC. We think it's pretty imminent that we're going to be launching. So we're very excited about that. As well, we have previously filed with the SEC for combination trades of up to 8-to-1 in terms of the ratio. So there'll be tide trades and Spikes futures both coming online at around about the same time. We expect that to be early next month-ish. That's kind of the expectation. Obviously, things can get derailed, but we'll have basically the full suite, the whole complement of tools that we need in order for people to be able to hedge themselves well. So we're really excited about that, and fingers crossed, things seem to be going pretty well.
That's awesome. So maybe even by the next time you come on, we'll have a future to sink our teeth into. How exciting is that?
Very exciting.
I'm excited.
You're excited. You're excited because you want to see your Viking make it into the real world.
It needs to.
Is Viking, is that still on the radar there, Simon? What's happening with Viking?
Did you guys decide to go V Spikes?
The name decision has not yet been finalized, Meatball, so you're in the running. You are in the running. We have been calculating it internally for quite some time, and it's nice and coherent. It's exactly, it performs the way it's supposed to. So it's ready to go, essentially. So, but we'll probably roll that out at the same time as we roll the futures and the tide trades out.
In a month, potentially, we could have an underlying here for Spikes listeners, which will be very exciting. I know, judging from your feedback, you guys have been waiting for. I think it's clear out there with the options right now. People are waiting. I mean, the future's coming. Why would you do a lot of size if the future's coming imminently? That's kind of what we're seeing out there right now. The OI in Spikes options since our last show, mostly the same. The big dog out there, still the OC 30 calls, over 12,000 of those open, and 6,000 of the OC 20s. Remember, that's that ratio 1/2. Still a lot of size for a contract that doesn't have an underlying particularly. So that's been nice to see a lot of that going up. And once the future's there, I'm sure people will have a direct hedge. I mean, you can hedge now, but it's a bit of a process. So you could clearly have an underlying. I think that'll drive a lot more action. 6,000 also of the SEP 25s, and we got 3,000 of the SEP 17s, and rounding out the top 5, we got the SEP 24s out there in Spike Land. Total open interest over 27,000, so a fairly healthy. Almost all of that. Only not a lot of love for the puts yet. All the action on the calls, particularly in that 1/2 out there, as we saw that roll in quite a bit. Let's move on to the other big options dog out there in the vol space. That is, of course, VIX. And VIX actually has had a pretty quiet couple of weeks from a volume perspective. Remember, it's been moving. Things have been moving out there, but the volume, not so much. And this is another kind of mild volume week. Obviously, things were closed on Monday, so a big goose egg there. But Tuesday, 325,000. Wednesday, 360,000 on the tape. Thursday closing out at 450,000. That was the most active day of the week. And today, coming into showtime, just about 250,000 contracts. So all of that, you can probably hear well shy of what the ADV was, which was around 735,000 contracts on our last show, which is probably why that ADV has collapsed aggressively. It's off. It shed about 200,000 contracts since our last show. The ADV right around 538,000 contracts right now. So that's still pretty good for this kind of seasonal end of summer coming into the early kickoff here in September. But compared to what it was just a few weeks ago, 700,000+ contracts. That also shows you just how active and how much action was going on in August. Usually a fairly seasonally quiet period, and lately, as the meatball was just saying, not so much. Maybe we need to come up with a good euphemism or a good metaphor for volatility in August. You got Rocktober, it kind of just rolls off the tongue. August doesn't really roll in with anything. Send in your ideas, listeners, for what we can call a very volatile August. As we keep on looking here, let's see, top 10 in VIX options land right now. Number 10 here got the, what do we got here? SEP 18s, 139,000 of those are number 10. So that's pretty light, given getting into the top 10 with just 139,000. That shows a lot of OI has rolled off the board a little bit. Number 9, the SEP 16 puts, $1.50 on the tape. Number 8, the OC 40s. That's a pretty optimistic strike. OC 40s, $1.51, also $1.51, so pretty close to tied for the number 7 to 8 spot. There are the OC 28 calls. And then number 6, we got the SEP 15 puts, our second put on the list with 153,000. Number 5, we've got the SEP 30s, 186,000. Number 4, SEP 20 calls, 210,000 of those. Number 3, the SEP 24s, 222,000. Numero dos here, the SEP 23 calls, 232,000. Number 1 with the bullet out here this week, again reflecting the fact that the volume a little bit lighter right now. 365,000 of the SEP 25s. Usually number 1, you're going to get north of 400, maybe even north of 500, 600,000. 365 does it this week for the SEP 25s. Total, just a tick north of 8 million contracts open, about 6 million on the calls and about 2.1 million on the puts. Other than that, a fair bit lighting it up. Mr. Meatball, you were regaling us earlier with some of the trades that caught your eye. What's catching your eye out there in VIX options land this week, sir?
Yeah, we did see a pretty big call buyer this earlier today. It was October call buyer. He was a buyer of 75,000 of the October 26 calls. I actually did some of this trade. We had a seller of the October 15 puts tied to 1780. In the future, 61-cent seller, sold close to 6,000. We've also seen some of the 16s trade. Those have been kind of the biggest trades that I've seen so far. And you know, that's kind of it. It's been a little slow. One trade that I was carrying that I actually closed today, I had the OC Nove 20 put spread on, long OC, short Nove. I had been short that at about 35 cents. I bought it back for 12 today. And then, Simon, you might like this. I did the Nove December 19 put spread, buying Nove, selling December. I collected a little under 30 cents for that time spread. And that's one that I kind of like as a potential sale. I really like, October, December, November, December as potential short time spreads against kind of December being what I would say probably improperly priced.
Simon, are you a fan of those, sir?
No, I like that. I think, that's right down my alley. I like it.
Yeah. And so, and I took the 15 puts that I bought and I actually sold out the 14s against it because I don't want a big vol position. So I legged into the 15-14 1x2 for like a 3 or 4 cent credit delta neutral. And that's kind of the bulk of my positions that I'm carrying in VIX. I do have some longer dated stuff in double X still, but those are kind of the two biggies that I've gone along with my September 16, 14.5 put 1x2.
And just to clarify for our listeners, when you say you participated in those tied VIX puts, you bought some of those. You bought some of those, correct?
I bought them.
Yeah.
I bought them for 61 cents. And then I sold, tied up the 14s at 32 with the same future. So 3 cent credit on the whole package.
Yes, listeners, these trades often shopped around quite a bit. Sounds like the meatball liking the other side of that, taking some of that down. Broker's happy. He's happy. Everyone's happy when those sorts of trades go up, especially if you can get another leg against it. You mentioned the calls. Those are kind of the big trade today. The trade du jour on an otherwise kind of quiet day, I said about 250,000 contracts have gone up so far today, about 75,000 of it, as Meatball alluded to, in the OC 26s, going up for 65 cents. pretty much someone liking those, gobbling up that entire strike. Worth noting, it's not opening. There is some size OI already available, as there is with most anything near the money, or even in this case, not that near the money, but still any relevant strike in VIX land is usually enough size OI to obscure what the heck is going on out there. No 37.5s also popular today. Looks like some paper selling on those about 14,000 times to 34 cents. Or maybe some people took down some of that ACK, maybe doing the other side of that, or maybe that same guy trying to sell off some other upside. Also ACK 23s, these are the weeklies expiring on the 9th, going up also for 65 cents, 12,000 times. So maybe someone else was expired by that other trade and decided to go a little bit closer to home and a little bit closer to the at the money on the strikes. Either way, similar premium level, which makes me a little suspicious. Yesterday, the big print going up was the SEP 23s going up for 45 cents. That was a pretty tight market. That was on the bid. I don't know if those are kind of bid out and someone was hitting that. Either way, went up 31,000 times. So someone could be crushing those, maybe dumping some upside that they had and decided maybe seeing the vol erosion and deciding to get the heck out of Dodge before it all eroded away from them. Either way, dumping a whole bunch probably of those SEP 23. SEP 20 is also going up 10,000 times. Looks like it was a bit of a diagonal going up here. It was a SEP 20 OCK 25 going up 10,000 times, doing it for looks like effectively a penny bid to the SEP. So yeah, doing that for 79 and 78 cents respectively. Looks like they probably bought the SEP and then sold the ACK against that one. Interesting. Actually, no, I take that back. There were 3 legs to this. It was 10,000. So it was a bit of a funky time diagonal ratio fly, if you can call it, because it was SEP 20s going up 10,000 times to 79 cents. Then we got 20,000 of the SEP 22s. So a bit of a ratio vertical 1x2 right there going up 52 cents. And then also you got that 10,000 lot of the ACK kickers against it for 78 cents. So that's a funky one. We don't see a lot of time flies or time ratios, time diagonal ratios, I guess, to be precise on this one. Either way, that's an interesting one. Wednesday was the big trades out there were pretty much looks like dumping calls again, except 42 halves. That's a pretty out there strike. Going up for a nickel. Someone found a bid for a nickel and crushed it to the tune of about 13,000. Also dumping the SEP 22s for nearly $1.92.5 right off the bid, 12,000 times on those as well. Dumping the 26 calls on Wednesday. So the day after they bought them all, day before they bought them all, someone dumped a ton of them for 70 cents, 10,000 times. And the ACK 30s also, so looks like paper, maybe buying those. We'll see. 10,000 times for 53 cents, kind of splitting the uprights there. Tuesday, the only other day of any action this week, was the SEP 14 puts, a little downside leading the charge. Again, these are mostly quiet volume days here, listeners. Going up for a nickel, kind of finding a bid on those 10,000 times. Also saw a bit of a put roll. SEP 14 puts out to ACK 10,000 times, doing that for a whopping 15 cents. And the ACK 26s were still active then. These are actually expiring on the 2nd, though. That 26 strike in October across the board has captured people's fascination this week, and it went up 8,164 times on Tuesday as well for 85 cents. Of course, Monday, nothing going up out there. All right, let's move on out to another product I know you guys are fans of, or perhaps fans of how it performs, which is not so great. This is, of course, VXX trading right around, looks like 24 3/4 today, off nearly $4, about $3.75 from our last show. So all those of you complaining about things being expensive out there, they were, but you got some decent performance out of it. It's also come in a little bit from a vol perspective as well. So hopefully that underlying move is paid for. Those pretty hefty premium levels you guys were complaining about a few weeks ago. Today on the tape, there was about $1.50 on the tape, so a decent day. The ADV is about 250,000. That's down a little bit, down about 20,000 contracts from last show, but nowhere near the precipitous drop-off like we've seen out there in VIX options since our last show. Let's break down the top 10 here really quickly. Number 10, the SEP 24 puts, 21,000. Number 9, the SEP 24 half puts. Got a feeling going to see a nice little put strip here. 22,000 of those. Number 8, our first and only call in the top 10. The SEP 28 calls, about 24,500 of those. Then back to the put palooza. The Jan 22 puts, 26,000. SEP 18 puts, number 6, 28, almost 29,000. Number 5, the Jan 14 puts. That's an interesting one, 29,000 of those. Number 4, the SEP 22 puts, 29,000 there. Number 3, SEP 19 puts, 29,000. Then we jump up a bit for number 2, the SEP 20 puts, rocking 40,000, almost 41,000 there. And the number 1 big dog position out there right now, we talked about these before. These were looking like a bridge too far, and they're looking a little better this week. We'll see if they have time. I don't think we're going to make it by SEP, but hey, crazier things have happened. The SEP 17 puts, 53,000 and change out there. Mark, I know your crazies in the pit chat. They love themselves some VXX. What's been catching your eye and their eyes out there? And do you think these SEP 17 puts have a chance?
I don't know about the SEP 17 puts. That's a pretty far cry.
That's aggressive.
I mean, you would need you'd need a sudden crash to what? To get to 17 from 25, you basically need the VIX to go to 10 like Monday and stay there.
Yeah, it's got to crater and just sit there the rest of the month.
Yeah, and vol futures just absolutely crash, and I'm not sure they're going to do that. I have seen there's a ton of flow though, and a lot of trading, a lot of stuff, a lot of puts trading. There's some upside call buying, but the heaviest volume today is the SEP 22s, believe it or not. Oh no, that's VIX. I'm sorry. Duh. Heaviest volume today, I'll be able to tell you in a second, is some a lot of what I've seen has been downside stuff. I have not seen a lot of upside buying, and I don't know exactly what's going on, but it certainly looks like it's primed for a it's starting. The curve is starting to act like it wants to normalize. Heaviest volume today, I think, is the SEP 625.5. So someone playing expiration today, that's not going to work in their favor. Someone looking for a real pop. And, aside from that, vol in of itself, implied volatility on VVIX is in pretty significantly. And that's one of the, maybe kind of the major story is that implied volatility continues to drop in this name.
Well, yeah, it kind of had to, right? We had our listeners writing in complaining about how rich it was. You knew that was kind of the canary in the coal mine at that point. Once that happens, it's probably going to come in, and it did. And so I guess the question is, did the pretty aggressive erosion, did it pay for the vol implosion out there, Mr. Meatball? Do you think it worked out from that perspective? Were your crazies piling in at those very rich premium levels, and did the erosion pay off for them?
I think the way erosion worked for us was doing kind of downside butterflies, things like that. One of the things you have to be careful is that you look at vol high and think, oh, look, when vol comes in, I'm going to make a lot of money. But the premiums get really juiced in names like VXX because everyone's thinking the same thing. And so you have to be very careful with a lot of this, a lot of this VXX delta. That's why Andrew and I love things like, put spreads, put flies, things like that, because, the premium in double X can get super, super rich.
Double X. I like that's what the cool kids call VXX.
Well, that's what they call it on the floor. It's VIX and double X instead of VIX and VXX, just so that nobody gets confused. No confusion. It's just fun. It's just fun to hear what the cool kids are calling VX, because we know we rechristened it VXX, so we have some buy-in on that naming there. Let's look at what's lighting up today. It looks like mostly downside today. The big print, 4,000 of the SEP 21 puts going up for a nickel on the bid. So maybe someone deciding 21 even is a bridge too far and taking a bid while they can get it. Or maybe they parked that bid and getting filled. They were 5 bid at 6, so that's a little bit of a weird one there. Also, OCC 40 is going up about 2,800 times for, looks like, on the offer. So someone lifting the offer on the OCC 40s a little bit. So not all downside play, listeners. Some folks, and OCC 41s as well, they went up at let's see. Actually, there could have been a spread because they went up right about a couple of seconds apart from each other, about 2,500 and 2,700 times. So maybe an OCC 40, 41 vertical for 3 cents, that
It's a weird one if you do it. That's someone who really likes his broker. Yesterday, 8,300 of the SEP 24 halves expiring on the 6th. So in the weeklies, going up for 12 cents, kind of splitting the uprights there as well. That was opening. So I could see some opening on the 6th, though. That's that's today. That's what we're just talking about here. Let's see. That's pretty close. They're playing a little close to the fire out here right now, listeners. They're hoping for the downside to kick in. Looks like there's still a bit of a way, about 24.80. We got a little bit of a room to run. It's off about 2/3 of a point. He needs a little bit more. I don't think 12 cents. I don't know if he's going to make it by the end of the day here, but crazier things have happened. More OC 46 has gone up yesterday as well, 7,500 times. VXX has been fairly active, even though some of the big volatility products haven't been of late. So the fascination with VXX or double X continues out there. 7,500 OC 46 is going up, lifting the offer for 15 cents. So it's not all downside, listeners. In fact, of the OI out right now, it looks like there's about 885,000 open on the calls and 758,000 on the puts. So calls actually still leading the dance, even though the top 10 is 90% puts. But net in aggregate, there still is a lot of call paper out there. Some of that could be vestigial, from old stuff that people never really had a chance to roll down or never decided to, and they're still hoping for a big pop. But there still are enough big prints out here going up in the calls to see that it's not all puts all the time. No 49s going up yesterday as well, 5,000 times for 28 cents. That's on the bid, actually, so maybe someone deciding to get the heck out of Dodge for those. The big trade looks like a straddle or maybe a combo going up on Wednesday on the 22 strike, 5,000 times as well. It's kind of the other big print out there. Simon, I know you've been busy doing your roadshow. Have you had a chance to pay attention to everyone's favorite / least favorite volatility ETP VXX of late, sir?
Not specifically, but I do have a question for you guys. I don't know that much about the ETFs, and I was wondering, do you think people want to see the XIV back? Do you get a sense from people? But do people ask? Do you listen to them?
I would say that is a weekly question, Simon.
Yeah, we get
when
that.
When are we going to get XIV back?
We've gotten that question many times here. In fact, I put that to an SEC commissioner not too long ago. Can we potentially see something like that? It seems like there might be more demand in the, shall we say, active retail and professional space than there is on the regulatory side for anything like that coming back. Also, the firms behind it.
There'll be some firms that step in and do this eventually, but there'll be some sort of writing about risk control where they can stop using the TAS, or they don't have to. They have some protections written in where they don't have to eat themselves, which truthfully they didn't have to do in the first place. But there'll be something more concrete written in to basically stop that type of action.
I think I said before on this show, I think conservatively sometime in the next probably about 2 years, I think is a reasonable time frame for the regulators to get enough distance behind them, between them and the Fed-apocalypse, to maybe consider approving something like that again, and a firm to figure out how the hell they're going to construct that prospectus so they'll have whatever the modern equivalent of that quote-unquote acceleration event that XIV had in their perspective, whatever the new version of that is, figure that out, get it approved by the regulators, get the BDs on. But I know a lot of BDs are very angry with how that played out as well, because they felt the brunt from their clientele. And a lot of them were thinking there still is a significant viewpoint out there in the professional side of the space and the industry side of the space that those products shouldn't be allowed, or at the very least they should have huge levels of approval. They should be like options, level 1, level 2, level 3. So if that viewpoint starts to gather a little bit of steam again, that could maybe push us beyond that 2-year time frame. That's probably the one thing I would see really kind of being a stickler for it. It seems like I haven't heard those grumblings in a while, probably because no one's come to the table with that. But Simon, if our audience on this show, who's kind of the bleeding edge of volatility, if they're of any gauge and sentiment, then yeah, those guys want it tomorrow. Before we roll on, Simon, last time you were on the show, we had a question about the MOVE index and about kind of treasury vol and alternative ways to use treasury volatility as a bit of a surrogate for VIX and for volatility. And it sounds like you had a little bit in your back pocket you were hiding from us last time, and it sounds like you got some more you can share with us on the treasury and indeed the fixed income volatility front, sir. Is that the case?
Maybe, yeah. So it's actually something we've been working on for quite some time, actually years. And so, there's the seeds of hope that maybe something like this will come along pretty soon. I certainly think that the feedback we get is that there's tremendous amount of interest in it. If you look at the size of the fixed income market, it's bigger than all the other asset classes combined, and it's a very sophisticated market. A lot of derivatives trade in it. It seems to make perfect sense to us. So yeah, we're getting good feedback about it, and so hopefully, in the not too distant future, we can actually sort of talk a little bit more in detail. But certainly, watch this space.
So nothing concrete you can share with us yet, what you're looking at in terms of spectrum or duration or underlying, anything like that?
Well, yes, I suppose I can tell you that it's going to be the front end of the curve. Now, obviously, rates trades very, very long tails as well, whereas in most other products, particularly equity, that doesn't really do that. But I think, the right place for us to start is with the shorter dated things, because it's more volatility is so well established in the equity space that I think it makes sense to take a leaf out of that book and sort of make it as consistent as possible. So your listeners, for example, who trade VIX and spikes, they will very easily relate to this, because we're talking about a 1 month duration in terms of the volatility on the underlying here. So, I think it will accord very well with the people who already are interested in trading volatility products.
I like it. I'm excited. You guys at T3, every time you come on, you got something new in your back pocket. So you got Bitcoin, you got the forthcoming Viking and the futures, you got now this fixed income volatility product or index. So a lot to keep an eye on over there. Listen, speaking of keeping an eye on things, or maybe an ear in our case, let's turn our attention now to your volatility voicemails.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, let's get to it. Already answered one here from Andrew89. Next up, we've got DANC, D-A-N-C, asking, whatever happened to that tradeable VIX cash product? Did it flame out? Well, I guess in a nutshell, to use your terminology, yeah, it kind of did. You're fairly certain you're referring to that now infamous product that was much ballyhooed a few years ago. Professor Whaley, one of the early VIX fathers there, was involved in that. And he was, to his credit, he was talking up a good game about how they were going to deliver what a lot of people want out there. They want effectively to be able to trade the VIX cash. There still is a lot of confusion about the VIX cash versus the futures. He wanted to make it easier for people to be able, if you see VIX cash at a 14.5, I should be able to just buy it and ride it up and sell it and vice versa. And he attempted to. Well, what he was talking about early on in the days of that product was he was going to deliver that. Then, as what always happens inevitably, and when people talk about that, is then the rubber meets the road and they realize that's a freaking hard thing to deliver. Some might say impossible without all sorts of other unintended consequences. Our old friend Jared Woodward used to say on the show, time value money, you can't really get around that, and you see that in that space. So then it eventually morphed into that kind of VIX up, VIX down product. I remember when that launched, we had those guys on, and we spent a fair amount of time talking about it. And if you recall, listeners, the paper flow was extremely biased. No one really wanted to touch the VIX down, so they had to have all sorts of, the prospectus on that was just intricate, is not even close to approaching what it was. The distributions and the things to make these two line up, it was Byzantine, I think, to say the least. Effectively, that was kind of the undoing of that product. Mr. Meatball, do you have fond memories of that VIX up, VIX down product?
Yeah. How that worked out great. No, I don't. I as soon as I heard it, I thought this is way too convoluted. It's never going to work. I really liked the guys that developed it, but that was never gonna fly.
Simon, you're a volatility product creator. In a couple of minutes, condense it down for our listeners. Maybe break it down for them. Why is that the unicorn everyone is that's the windmill everyone's tilting at in the vol space? Why is it so difficult to crack that nut?
Well, yeah, I mean, it's the constant term structure problem, isn't it? So, yeah, I understand why people want to do it. And unlike many other products where you don't have such a steep incline typically in the forwards, you can kind of get lost. So if you do a 1 month or 2 month in, let's say, I don't know, euro dollar FX, for example, the difference is minuscule, relatively speaking. And so people just assume that they want to get the cash. Everybody would love to be able to invest in the cash, but the problem is, of course, it's just not feasible. And unfortunately for everybody, there's this impact of decay, and that's why the term structure is more often than not upward sloping. It makes it impossible. I mean, you mentioned likely impossible or not doable. I mean, it is functionally impossible to. I mean,
the closest thing that you can get to trading an actual VIX would be what, like a variance swap, basically, right? That's probably the going to track the VIX the best. So you would need some sort of tradable, a tradable product that carries variance swaps, and that would be it. And right. Good luck finding a bank that'll finance that, that'll back and finance that. No way that would blow up on the holder. So unfortunately, if you're if you want to buy 5 million Vega, you can get something relatively close to the VIX. But last I checked, most retail traders aren't buying that much.
Yeah, kind of hard to get a 10 lot of that in your account at IB or TD or wherever you're trading out there. All right, it's time for us to keep on rolling into our final segment. It is time for the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the Crystal Ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the program where, of course, we attempt to wrestle with that slipperiest of volatility pigs, try to nail it down for the coming week. It's a challenge. You guys should try it at home. It's fun. And as you know, last time we got together, it was actually 2 weeks ago. So I was at the time picking about a 1930. At the time, you weren't sure if we were going to have a show on Friday. So that was for last week. The meatball was at about an 18 and a half here. And now coming into this week, of course, we don't really have a prediction for this week because we were off last week. So let's just wipe the slate clean. We'll be nice. I'll be charitable. And tell you what, I'll be nice. I'll extend the olive branch out to our guest here. I'll say, Mr. Simon, since no one picked for this week, we'll give you the pride, the joy of going first, sir. What are you feeling for this time next week in spikes and or VIX?
Oh, well, given that I've said I'm a buyer on dips, I can hardly go short. So I'm going to go, where is it now?
1503.
The cash?
Yeah, 1503.
1503. I'm going to go.
Yeah, the spike's around there too.
I'm 15 and a half.
All right.
15 and a half bid.
15 and a half. So spikes is at about exactly a 15 and a half. So you're predicting an unched week for spikes. All right. And Mr. Meatball, I'm feeling charitable this week. I'll let you go next. What do you say?
Well, I'll just say last week we settled 1898, so I think I would have won between us.
Okay. Well, there you go.
Yeah. So, we're about 15. I am actually a believer that the next week is going to be slow. So I'm going to fade here, but by let's see. So we're going to come in on Monday. I think we might see a blip over 16, but we settle at 14.12.
You should see, as you were talking, I wrote for myself. I wrote 14.35, but I will move that now to give you a little bit more room. Nice guy that I am, but I'm feeling a little bit of erosion as well. But tell you what, I will bump it up. I will bump it up to give you enough breathing room. That's the charitable fellow that I am. I'll say 14.65. That's kind of VIX cash and also spikes. We kind of do a twofer now, listeners, because it's so hard to add in the extra layer of predicting the premium of spikes versus VIX cash and vice versa. I don't want to do that to our guests. So we make one prediction and then we slot it out somewhere in the middle there. All right. Unfortunately, listeners, that music means we've come to the end of another epic sojourn through the world of volatility. Oh, what an epic one it was. We talked about a quiet, but still an interesting week out there in VIX options and spikes options and VIX futures, the forthcoming spikes futures, the forthcoming whatever it's going to be called, fixed income volatility product from T3. So, Simon, you gave us some good teases. Anything else you want to leave us with? Any hints, any teases of what's in your back pocket? Now is the time, sir. The floor is yours.
I'll leave that till the next time I'm on, because I can give you much more fulsome information at that point, I think. I'll tease you, okay?
In the meantime, if people want to check out what you guys are working on at T3, where should they go? What should they do, sir?
You can go and check out the stuff that we do on t3index.com. We've got a whole bunch of different things that we're doing on that website.
There you go. T3index.com is the place to go. Also give them a follow on the old Twitters at T3index. A lot of good data and nuggets. Maybe some hints. Maybe some teases in between Simon's biannual appearances on the show here. You can learn a little bit more over there at T3index on the Twitter machine. And Mr. Meatball, I know you guys have been cranking away on the YouTubes of late. I've heard a rumor you got an interesting webinar coming up on Wednesday. What's cooking in the land of the pit, sir?
Yeah, I'm doing how I'm trading butterflies right now next Wednesday. So really, how I'm trading butterflies next Wednesday.
I was just gonna say, is it right now for next Wednesday?
Right now for next Wednesday. So how I'm trading butterflies next Wednesday, you can see on Wednesday, September 11th, 9 p.m. Eastern Time. Go to optimism.com/bfly. That's BFLY. bfly. To register and check it out. Should be a great webinar.
There you go. Register today for how Mark is trading butterflies next Wednesday. There you go. Optionpit.com/bfly is the place to go. So you too can get his next Wednesday butterfly webinar. And on behalf of Simon and the Greasy Meatball and our friends over there at MIAX, Shelley and all them, and of course myself, I thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. Probably can do a whole Q&A show. Maybe one of the days we'll do that just for fun. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.